Welcome to the Notary News Channel. My name is Desiree Roman Rodriguez, and I'm a subject matter expert in all things notary in the state of Illinois. I'm also an enrolled agent credentialed by the Internal Revenue Service to prepare taxes and represent taxpayers before the IRS all the way up through the U.S. Tax Court. And this week on the Notary News Channel, we're going to be talking more about notary, signing agent, and small business owners and taxes. We did have a couple of comments of people wanting to have more information about specific tax breaks, tax deductions, and so we're going to talk a little bit more about that today. But let me first preface this with the information that I'm providing is general information, and so it's to be used as a guidelines. It's not to be considered professional tax advice. If you need specific strategies, or if you want strategies that's going to work specifically for you, for your business, for your particular financial picture, you must consult with a tax professional, a CPA, or an enrolled agent. Let me first remind you that if you earn $400, then you have to file a tax return. Now, you won't necessarily pay tax on the $400, but you would be subject to having to pay self-employment tax. As a sole proprietor, you have to make sure your numbers are correct. When you're doing your tax return, if your numbers are out of whack, that's going to be something that's going to warrant a second look. That translates to audit. So you don't want to trigger an audit by something that you did incorrectly on your tax return, or that your preparer did incorrectly on your tax return. Because remember, even if your tax preparer does your return, if you sign it, you are the one that's on the hook for any errors or any false things that the preparer might have put on there. You are the one that's going to be liable for any penalties or fees associated with needing to correct it or needing to amend it. You want to make sure that at least you have an understanding about what it should look like and to be able to spot if something's not quite right. The biggest thing that I talked about previous video was that you want to make sure that you are providing your numbers that show, yes, I have a business, yes, I earned income, and these are my business expenses, but I also made enough money to be able to live on. So remember, you cannot zero out or expense away all of your income, because if your notary or signing agent business is the only source of income for you and you zero it out with deductions, or worse, you make it negative, you say you had negative income, that's definitely going to warrant a second look from the IRS, because the first question that's going to come to mind is, well, how did you pay for your rent? How did you buy food to eat? How did you pay for your household expenses? And how did you do your laundry? Can you zero out or have negative income in a notary or signing agent business? Yes, you can, if you have another source of income. So if you are working a regular W-2 job and you have your notary business as a side business, and let's say you earn $10,000 in income in your side business, but your numbers show negative 15,000, meaning you zeroed out the 10 that you earned, and you lost another 5,000, well, your W-2 income would essentially cover that 5,000. And so the IRS would be able to look at your tax return and say, well, they made $30,000 on their W-2 job, lost 15,000 of the 10 that they earned. So the 5 that would come from your W-2 income still leaves you $25,000 to be able to pay your rent and your bills and live off of. So that would be explainable. But to say I made 40,000 and I lost 45 and you have no other income, now you're asking for trouble. If you are an LLC, an S Corp, or a C Corp, then obviously you're not subject to self-employment tax, but you must pay yourself a wage. The IRS has a stipulation that any owner or officer of the business is considered an employee, and employees must be issued W-2s. You cannot issue yourself a 1099. If you are doing your business as a corporation, your corporation must pay you salary, any kind of wages. Now, the IRS also stipulates you have to have reasonable compensation. So, for example, you cannot say you earned $250,000, but you paid yourself $20,000 and nobody else worked for you. That's not reasonable compensation as far as the IRS is concerned. If you made $40,000 or $50,000 and you paid yourself $10,000, that would be reasonable compensation. As a general rule of thumb, those were just examples. It's not what you should be paying yourself on those wages. Of course, your wages are always going to be based on your earnings less your deductions or the cost of you doing business. And again, that is something that you should be working with when you are with a tax professional. The IRS is going to make the assumption that you are not a not-for-profit. You aren't volunteering your services to your business. You are in it to earn money, make a living. And so you would not work for anybody else for free. So you are not expected to work for yourself for free. You are expected to pay yourself a wage. Now, if you do give yourself a 1099 and not a W-2 like you're supposed to, the IRS can assess you a trust fund recovery penalty, which essentially means you didn't pay your self-employment tax or you didn't pay your Medicare or Social Security taxes, and you're going to pay the Social Security and Medicare taxes, and they're going to charge you a penalty for you not having done it. Do it correctly, issue yourself a W-2, and make sure you have the proper taxes deducted from both the wages and that the business pays as them supposed to be paying 7.5%. You pay 7.5% out of your wages, and the business pays the other 7.5% for you. The third thing I want to talk about is the partnerships. A single member LLC is typically a tax return that ends up getting put on your Schedule C. You would not normally file a 1065 business tax return if you're the only member in your LLC. But let's say you are doing a husband and wife notary business and you both opened up a partnership. Well, your partnership is going to generate revenue. You get issued your income on a Schedule K, and then the Schedule K, if you classified yourself as a S Corp, your Schedule K then gets reported on your 1040, your personal tax return. Now, an LLC that's classified as an S Corp, there is no self-employment tax. If you are a partnership and you did not classify your business as an S Corp, then your partnership will be subject to self-employment tax. So it's very important, if you're going to start out in this business, that you make sure you are classifying your business in the correct tax bracket, because putting yourself as a regular partnership, you're going to make yourself subject to self-employment tax. Now, the next section is going to be the taxes. Okay, so the three taxes that you're going to be paying is going to be your income tax, your federal income tax, your state income tax, and then your self-employment tax. So your state income tax will not apply to states that do not collect state income tax. There are some states that there is no state tax returns required to be filed. What are the ways that you can reduce your self-employment tax? Well, the first way is going to be business expenses, but we have that catch-22. If you are zeroing out all of your expenses, then you're not going to have money to live on. You don't want to trigger an audit. If you are a business owner that rents properties, if you have rental income, Only if you are a partnership with your spouse and you classified your business, your rental income property business, as a qualified joint venture, then you would not be subject to self employment tax. And you would indicate that on your Schedule E. But if you are in a partnership and you did not classify yourself as a qualified joint venture, then you would be subject to self-employment tax. So that's also very important. And that's only for rental income business. That's not for notary business. How do you minimize the self-employment tax if you are a notary or a signing agent? Well, you get the break of not having to pay self-employment tax on the actual fee that is charged for the notarization, not for the entire signing fee. Two different designations. So in Illinois, we are allowed to charge $1 for each notarization that we do. In other states, you are allowed to charge $10 per notarization, $15 per notarization, $25 per notarization. So whatever the state designates is the fee that you may charge to complete a notarization. That portion of your overall notary signing closing fee is going to be exempt from self-employment tax, not exempt from income tax. So, for example, then here in the state of Illinois, I charge $125 for a closing. I do 5 notarizations. So I'm going to pay income tax on $125. I'm going to pay self-employment tax on $120. $5 of that is going to be exempt from self-employment tax. Now, is it worth it for you to do this? Let's say I had a W-2 job and I did closings on the side and I did maybe 3 signings a week. And on average, it's 6 notarization in each signing. Well, that would be about $18 that would be exempt from self-employment tax. Now, if I went through that calculation, and again, this is just an example, if I go through that calculation and say, well, I do closings about 40 weeks out of the year at, 3 closings a week and 6 notarizations for each closing. So that would leave me $720 that I could theoretically exempt from self-employment tax. But 15.3% of $720 is $110 and some change. Now, is it worth it for me to have to keep track of all of the notarizations that I'm doing to save $110 of self-employment tax? For me, that would not be worth it. For one, I'm okay with giving an extra $110 to my Social Security to make sure I get a bigger payoff when I retire. But two, the amount of time that I would have to spend tracking the notarizations for those closings that I'm doing throughout the year, because you have to have proof of it and you have to track it, that it's not gonna be worth the $110 that I would save. On the flip side of that, if you're in one of the states where each notarization is $10, now you're talking about, yes, it might be worth it to track it. So even if, let's say, we do the same scenario, you're doing it part-time, you do 3 closings a week, 6 notarizations per closing. That's $60 per closing just for the notarization fee. So if you had a closing that was $120 and you did 6 notarizations, that would be $60 that you would have to pay self-employment tax on, as opposed to $120. So if you do 40 weeks of 3 closings a week with 6 notarizations, you're looking at $7,200. And then 15.3% on that is a little more than $1,100. Is it worth it to keep track of my notary fees to save $1,100? Absolutely. So you have to go with what's going to be cost effective, time efficient, and obviously financially beneficial to you and your business. So that's all what we're going to discuss today. If you have other topics you'd like for us to talk about, then please post in the comments below. If you have a specific question that you don't want in the public forum, feel free to send an email to info@romanendeavors.com. And don't forget to subscribe below. And thank you so much for watching. Have a great day.